Hey, what is going on, guys? It is Brandon, the Fit Crypto, helping you make those crypto gains. Thank you so much for clicking on this video. And as you can probably tell by the title, I'm going to be talking about price predictions today. And I've been wanting to make this video for quite some time now. I just haven't really gotten around to it because I put in a lot of work and thought into this, as you can see from this screen right here. So please stick around, watch the whole video through. I promise you that you're going to get some value out of it. It'll be well worth your time. I'm going to be shooting for maybe like, a 15-minute video. So not that much time. I promise you it'll be well worth your time. Hopefully it opens your eyes and gives you a new perspective onto the crypto space, as well as this whole, price prediction thing that's going on that I'm seeing. So let me just preface this by saying I'm not trying to attack anybody. I'm not trying to, call anyone out or anything. That's not what I'm here to do. The goal here is to just, give you guys perspective as to what a price prediction actually is, my perspective on it, and to kind of educate you guys so that way you can, better wade through all the noise that's going on in the crypto world. So before I begin, let me just pull this up. Okay, so before I begin, my background is I studied economics and finance in college. I worked in the legal field for many years. I was a financial analyst and for part of my time. And during that time, I did damage valuations. Now, what a damage valuation is, when you hear in the news, you hear a company or you hear John Sue's company XYZ for 10 million in damages. Well, have you ever wondered where that 10 million in damages number came from? Yeah, it came from guys like me. We do analysis and we, try to evaluate tangibles, intangibles to come up with a valuation. So I have experience in valuation, okay, in evaluating assets, intangibles, tangibles. So that's kind of my background. So I do know what I'm talking about, and I'm not going to be modest about it. I know what I'm talking about when it comes to this stuff. And like I said, I don't know what anyone else's background is. When I scroll through YouTube, I see all these, all the price predictions. This coin to $10, this coin here to the moon, yada yada yada. It's all a bunch of noise to me, to be honest. And I never click into the video, so I don't know how they're backing their claims up. Maybe some people are building models. Maybe some people are just going with what they see or what they feel. I don't know. I don't have time to watch other people's videos, to be honest. So what I'm doing is, based on what I've seen, I'm going to break down to you guys from a financial analyst perspective, from someone who knows how to evaluate assets. I'm going to break down to you guys why, in my mind, you should listen to price predictions with a grain of salt, okay? And why I would not take much value or stock in people's price predictions. And I'm going to break it down to you guys using an analysis on historical data using Bitcoin as well as VERGE. Okay, so that's what I'm going to do. And like I said, I'm just going to preface this by saying I'm not attacking anybody. There's no hate involved. It's just merely, I'm just speaking my truth, okay, based on what I've seen. I just want to get my thoughts out there to help you guys out. And at the end of the day, I just present facts. That's what I do. I present the facts. You can draw whatever conclusion you want from the facts. So I said my background. So what is a price prediction? Now, when people are making these price predictions, I think they're just blindly saying, okay, a price prediction, it's what I'm guessing this is what the price per coin is going to be. And I don't think a lot of people are realizing that a price prediction is an asset valuation. By saying that you think Tron is going to be at $1, you are making a valuation projection that you think Tron at $1 per coin is going to be worth whatever the number coins it is. Let's say it's $10 billion market cap. So if you say Tron, I'm predicting a $1 price per coin for Tron. That's my price prediction. What you're really saying is that you are you're evaluating Tron as a company being worth, $10 billion at the end of the month. That is what people are saying. Okay. And I don't think people realize that's really what they're saying. And before we get into the whole market cap argument, I understand I've been, people comment saying, market cap's it's not the only way to, it's not a good way to value things. It doesn't take into account XYZ intangibles. And I agree to a certain extent. However, unless you can build me a model that lists out all the intangibles and you can then quantify the intangibles for me, then don't make an argument that market cap is not a good way to evaluate a company or project, because that's all we have right now. Okay. Unless you can build a better model that takes into account intangibles and quantifies them, don't say anything about market cap not being a good valuation. Okay. That just gets me kind of heated a little bit because people don't know what they're talking about, to be honest. Anyway, so we're going to dive into this. What is a price prediction? So price prediction is essentially an asset valuation. And how do you value assets? Well, you look at multiple things. You look at the tangibles. Now, the tangibles are, cash or your liquidity, assets, resources, liabilities, data. Tangibles are hard. It's physical objects, cash, things that are quantified in that manner. Okay, it's something tangible. You can see it. Not really taste or touch, but you can see it with your eyes, and it's quantifiable, and it's quantified using like a standard of measurement, more or less. Okay, like money. It's essentially money. Where you get into the confusion is through the intangibles. Okay, the intangibles such as market sentiment, which is how the market feels, human behavior, algorithmic trading, price manipulation, global events, weather, and the environment. Okay, now these intangibles, they are factors that affect the value of an asset. However, there is no standard of measuring or quantifying the impact that they have on an asset, because you can't necessarily directly convert a specific human behavior to a dollar amount and thus use that dollar amount to affect the valuation of an asset. Okay, there's no set scale, and you can't do it that way. Okay, so that's why there's a lot of intangibles that are very difficult to quantify, and makes it difficult to evaluate. It makes it more complex to evaluate an asset. Okay, so that's how you value an asset. You're basing it on tangibles, such as the ones listed there, and then intangibles. You have to take into account tangibles and try to find the best way to quantify those tangibles on some sort of a scale that can correlate to like a cash valuation, or just find some way to quantify the intangibles and tie it together with the tangibles to create the valuation. Okay, so those are intangibles. And basically, as a financial analyst and financial modeling, what I'm about to do and what I'm about to show you is you collect and organize data, use math and financial formulas to connect certain data points, create some visuals, and you utilize all of this together to look for trends or correlations. Because once again, a price prediction is the only way you can predict the future is by looking at the past. Okay, you analyze the past to predict the future. That is how forecasting works. Okay, that's how financial forecasting works. You analyze historical data to make predictions for the future. And the thing with the crypto markets, there is not any historical data. Okay, you're looking at these altcoins; they haven't even been out. Some altcoins haven't been out they've been out for 6 months. Okay, 6 months. That is not enough data to analyze to predict anything. Okay, you can't have 6 months worth of data and try to be making predictions, especially off the top of your head, with not even building a model, which I'm sure a lot of these YouTube experts, they're not building financial models. Okay, they're just making blind predictions based on 6 months worth of data. And like I said, there's not enough data to predict the future, because that's what we do. Use the past to predict the future. Okay, now that rant's out of the way, I'm going to jump into my spreadsheet here. Okay, so this took me a while to put together, so appreciate this. Basically what I did, so this is Bitcoin. Okay, this is my Bitcoin historical price model. So I'm going to break down what the tables are, and then we'll dive into the charts. So this is the year 2016. We have 2017 and 2018 down here. The months listed out: high close, low close, average, and percent change per month. So what the high close is all of this data is found on coinmarketcap.com. If you didn't know, you can go to CoinMarketCap. There's a tab that says historical data, and it will list you out every single day, the high, the low, the opening price, and the closing price. So what I did was I put in a lot of work. I went through 2 years. I was trying to do 3, but I just did not have time to do 3 years worth of data. So we're just gonna have to make do with 2. The high close. So I looked through the month of January 2016. I found the price at which Bitcoin closed at the highest during the month, and then I found the lowest close of the month, and then I just took an average of the two to get the average close of the month. Okay. Now I would have liked to average all 30 or all days of the month, but I don't have the time for that. So the average close per month is not as precise as I would like, but it's enough to get the job done, enough to get my point across. So that's what this is, percent change per month. This would be, so how is the February average close compared to January's average close? So you can see the number, 411.19 for January's average close. February's average close is 404.38. So it was a 1.66% decrease in the monthly average close. And so they're color coded as well. So you can see, the reds that month, wherever it's red that month, the average monthly close was lower than the prior month. Okay. And everyone here increased. As you can see, 404.38. And then it closed at 417.85 for March, resulting, in a 3.3 1/3 increase in average closing price. Okay. So that's basically, okay. So that's 2016, 2017 is the exact same, except I added a percent change per year down here, which takes into account, it's the average closing price in the month of January 17 versus the same in 2016. So how did January 2016 average closing price change relative to January 2017 average closing price? So it increased 134.99%, as you can see here. So the 411.19 jump to the 966.25 resulted in this percent increase, and so on and so forth for the remaining months. Okay, so now that I explained the numbers, that's how I derived the numbers. But because it's harder to look at, excuse me, I got to get a drink. Because it's harder to look at, tables, I made graphs. Excuse me. Okay, so I created these graphs because graphs are awesome, visuals are awesome. So here's 2016. So I need to add into this. This is just 2016, price. So basically it's just a simple line graph that shows the high close, the low close in red, high close in blue, and the yellow is the average close. Okay, so we're just plotting these points, and we can see a trend here. Okay, in 2016, what I conclude from looking at this, the price of Bitcoin in 2016, we saw an increase in a linear fashion, meaning more or less it's a straight line. You could draw a straight line through that. It's more linear. 2017 to, I included January 2018. We see, once again, an increase in the average closing price per month on an exponential level this time, though. Okay, so we saw a linear increase in 2016. Now this is an exponential graph. It rose exponentially, and then now we see January, it's dropping. Okay, so I just added this to the graph to show, we just closed January, so that's where the average price, average closing price charts look like for the past 2 years. And so, like I said, the conclusion I draw is this is a linear price increase. This is an exponential pricing increase. Okay. Now that's all fine, right? But what's more important is the point that I want to make in this, the point of this video with price predictions is these graphs show the percent change by month. Okay. So for 2016, this is basically graphing these changes per month up here. Okay. So we're showing, February, there was a decrease in the average closing price. So anything above this line means that the closing price of that month was greater than the closing price of the previous month. Okay. So we're seeing an increase in closing prices increase, and then we see a drastic drop in closing prices. And then we're showing an increase again. We show a drop again. We're showing up here. That's 2016. Okay. 2017 is even more sporadic. Okay. So it's up, down, up, down, up, down. What I get from this is what I would, if we were to try to, find a correlation or trend, I would like to see somewhat of obviously a straight line and like a horizontal straight line, that would just mean that there's a steady increase month by month, by month by month. It just increased 10%, 10%. Okay. Something like that. That would be nice to see. However, 2016 is kind of sporadic. 2017 is very sporadic. Okay, you have increases, and then you have lower rates of increase. This chart is all over the place, and this is more of a monthly chart showing change in it's change in monthly closing price to the prior month. So we're seeing lots of there's you can't really draw any conclusion from this. There's no trend here. There's no correlation here other than it's up, it's down, it's up, it's down, it's up, it's down. And this is the point that I want to get to when it comes to making predictions like on a monthly basis. Is there's no the month to month percent changes are all over the place. Meaning it's what I gather from this is that it's very difficult to make a prediction on a month basis. By trying to predict something is going to go a certain price within a month span. There's not a lot in the historical data of Bitcoin that's showing me that, the next month could increase in average closing price. The next month could decrease in average closing price. It's not a nice graph like this. So that's what I gather from the percent change per month graph is that on a month-to-month basis, the average closing prices are they're neither increasing nor decreasing at any one given rate, nor a steady rate. Meaning, it's very hard to try to predict what it's going to be in 1 month from now. And maybe if I spent 10 more hours on this, I could maybe find some sort of correlation, but I don't have the time for that. This is just, like I said, I'm doing this a very simple flyover analysis for you guys, basically showing this month to month how all over the place it is. Okay. Next, we're gonna look at Verge. I picked an altcoin and I picked Verge because people love Verge and it's the most popular one. So I thought I'd do this one for you guys. So we have the same thing, the same graph. Everything I explained here is the same, except this is for Verge. And so we're looking at the 2016 price. And like I said, these things, you can get these from CoinMarketCap. It's the ones below that I'm placing more emphasis on. So once again, we have Verge here, the high, the average of the low, see massive spike in the average closing price, and then it drops down, tapers off. And then 2017 to 2018, it's very steady here. And then we see the massive increase in December, and now we're seeing it drop off. Okay. So if anything, if the past is any indication of the future, it's looking like this all over again. We're seeing a massive increase, right? And then levels off, drops, tapers off back to original price. It's going up, it's tapered off. Will it drop? Will it not? That's the thing. We have to look at what are the intangibles that were going on here? What kind of global events were going on here? What was the market sentiment at this time? All these factors that were going on at that time, are they going on now? Or have those intangible factors changed? And how different have they changed? And I would honestly say the intangibles are vastly different in 2018 because one, more mainstream adoption and mainstream attention that crypto is getting is putting more people in there, but as well, we're increasing government regulation. Governments are starting to get involved now, so that could also drive the prices down. So just because I'm seeing it's kind of looking like 2016, I still am not confident in saying that it's going to go up or down. It's going to follow the trend that it did last year, because the intangibles that are going on right now are vastly different than the intangibles and the tangibles that were going on at this period of time. Okay. So in my mind, this could go either way. And, as someone who does valuations, who knows how to do these things, I would not be confident in saying one thing over another. I just looking at the data, looking at the numbers, trying to, evaluate the tangibles and intangibles. I just, like I said, it would be hard for me to recommend one thing over another based on what I know. So we're going to look at the change per month. Once again, this chart, we saw the March. February, we saw a massive increase from January to February in average closing price. And then it just, the rate at which it increased, drop. And then it started losing value here. And then we're increasing value. Well, we still lost value. Anytime the line is under zero, it means we're losing value in average closing price. Okay. And once again, this looks a little bit straighter than Bitcoin was, but it's still, you might be able to regress a line through here. But once you jump over here to 2017, it basically increased throughout the year. So that's a good thing, right? But the month-to-month fluctuations, which is really what I'm focusing on, okay? Remember, when I'm talking about the price predictions, I'm talking about the people making these month-to-month predictions 2 months, 3 months down the line. The month-to-month fluctuations, there's not a trend. I really can't find, just by looking at the graph, strong correlations between anything. It's just month to month is just too volatile, too sporadic. There's too many factors to take into account to be able to, accurately predict. And like I said, there's not a lot of historical data. And look at the historical data we have, the price, look at it throughout the whole 2017. And then suddenly we see this and then this. How are we going to use this for the future? Okay. Does that just mean that the next time it goes down here, it's going to shoot up? There's a lot to take into consideration here. And, maybe, like I said, I look at this from someone who's done financial valuations, someone who's done asset valuations. So this is my forte. So I'm diving deep into it. And, some of this stuff might go over some of your guys' head. And, some people might think I'm, looking too deep into it, but, this is what I do. And this is how I look at it. And from what I see, I see a lot of, I don't see trends. I can't really find any strong correlations that would make me confident in predicting anything in the future. That's pretty much what I'm saying with this. Okay. And this is Verge. Like I said, we see a huge increase, but 2016 showed a massive increase and then an absolute drop off and taper off. Okay. And we're seeing the same thing. We saw an increase. Could we see a drop off? There could be potentially a drop off due to the fact that it happened in the past. But once again, how, we need to quantify the tangibles and intangibles and how vastly different they are now than they were a year ago. And there's just a lot to take into consideration before I would personally make a price prediction or an asset valuation. All right, so let's jump back into the Bitcoin one. I am going to tell you guys one thing. What I feel is that Bitcoin, over a year-to-year basis, in 2016, we saw an increase in price. There were some months where it went up, some months were down, but over the course of the year, we saw a linear increase. Okay, 2017 to 2018, we saw an increase as well. Some months were up, some months were down, but over the course of a year, we saw an exponential increase. So I'm seeing linear growth in 1 year. The following year is exponential growth. So that's kind of leading me to believe that there's going to be growth in 2018 over the course of the year. That is a claim that I am willing to, I would put some money on, because I have 2 years worth of data on Bitcoin and I see growth in both charts. And not only do I see growth, but I see an increase in the rate of growth, because we go from linear to exponential. So there's an increase in the rate of growth as well. And then you take into account all the people that are getting into crypto now. And if I were to make a prediction, which, like I said, I don't make price predictions because I don't, like I said, I don't know. I don't know on a month-to-month basis what the price is going to be. But if I were to make a guess by the end of the year, I would say Bitcoin has grown a decent amount and that Bitcoin would be a worthy investment. Okay. Anyways, I think that's going to wrap this video up. I think I got everything that I wanted to say. I just wanted to prove the point that in order to predict the future, you have to analyze the past. Okay. So that is what financial forecasting is. If you're going to be making a price prediction, you are doing financial forecasting. And to do financial forecasting, you look at the past. Okay. And I've shown you the past on 2 coins. And I've given you, I've given you some visuals. I've presented the evidence. I've presented the numbers, and you can draw whatever conclusion you want from it. Okay. I've told you my conclusion, what I've drawn from it. I personally just like, I just think the growth of Bitcoin looks good, and I believe Ethereum looks something like this as well. Anyways, guys, that's all I want to say. I really hope you enjoyed this video. I hope it was eye-opening for you guys. I feel like there was one more point that I wanted to say. What is it? Just be wary, okay? Like I said, I'm not looking to attack anybody, but this is my area of expertise. This is my forte, and the stuff that I'm seeing, I don't know if there is any validity behind what people are saying, because I don't have the time to watch people's 30-minute videos of people clicking around CoinMarketCap, okay? No offense to anybody, but I don't have time to watch any other stuff. So if people are doing stuff like this, then that's great. Then I'm not talking to you. But, for those people that are watching all these other channels or other people saying, man, I really think Coin X is going to hit $10 this month. It feels really good. I like it. It's a good long-term growth. You can throw buzzwords, and you can throw finance and investing buzzwords out all you want, okay? But if you don't have numbers, and if you don't have data, and if you don't have a model behind it, then there's a person like me would never listen to you, okay? And I just want to spread, I just want to share my truth, share you guys my experience with experience in this field, to kind of open your guys' eyes, give you guys a new perspective, a new angle, and way of looking at this. Just once again, to help you guys clear out the noise, so you guys know, don't get caught up in all the noise. Just, oh, I do remember what I was going to say. I believe in crypto because I believe it's a financial revolution. I believe that old systems are falling and new systems have to come into play. Like I talked about, predicting the future using the past. I'm looking at this from a big picture perspective. I'm looking at the past. Back in the day, we used to trade in animals. Okay, we had a barter economy. I gave you an animal, you gave me some grain. We head on our way, and then we moved into that's inefficient. So we created money, and we lugged around gold and silver. And then we turned those into coins. Okay, and then coins started being too hard to carry around. So then we turned it into paper, and then now we don't want to carry paper around. So we turned it into plastic. Okay, and now that plastic, we're starting to turn it into just digital currency that is still paperback, but now we're in another transition into pure digital currency. Okay, so I'm looking at the crypto space from a very large, big picture perspective. How historically us as humans, as a civilization, we have progressed in how we exchange value with one another. Okay, and I currently see us in the midst of another shift in how we exchange value from paper money. We're bridging the gap from paper money to digital currency, because right now we're doing paper-backed digital currency, but we're on our way to complete digital. Okay, that's the way I see it, and that's why I believe in the crypto as a whole. And I'm looking at this from a big picture perspective. I don't get caught up in the whole month-to-month price predictions. Is this coin going up? Is this coin going down? I believe in it as a whole. I believe in the big coins as a whole. I believe they'll still be around. A lot of these coins aren't going to be around. A lot of them are just copycats of one another. But yeah, that's what I wanted to say. That's how I view crypto as a whole. I view it from a big picture perspective, and I'm looking at it as a progression in how we as a civilization exchange value with one another. And that is why I believe crypto is here to stay. And that's why I think if you invest in Bitcoin or Ethereum, you could just set it and forget it and not worry about any of this stuff. Okay. Just, that's what I would do. Maybe that's what I'm doing, because you know what? I don't like the stress of dealing with all this day-to-day nonsense, ups and downs. Okay. It's too stressful. Okay. I like to set it, forget it, and chill. That's what I've learned, guys. But like I said, you guys can do whatever the hell you want to do. Okay. These are the facts. Draw your own conclusions, make your own decisions, be your own person. Anyways, guys, that's going to do it for me. Thank you so much for watching this video. Thank you for sticking through it. I really hope you enjoyed it. I hope you found value in it. I loved making it. It was a lot of work on my end, but this is the stuff that I enjoy doing. So if you liked the video, please, please, please give it a thumbs up, subscribe, and let me know if you want to see more content like that. Okay. I'm trying to figure out, how I'm making myself unique in the crypto space here. And I think the videos where I do more financial analysis type stuff, is good because that's kind of my forte. So if you guys want to see more of this financial analysis type work, just let me know in the comments below. No technical analysis. Okay. I don't do any of the charting stuff. I don't look at those candlesticks. Staring at those candlesticks, makes my eyes bleed. Okay. So no technical analysis in that sense. But if you guys want to see a more financial analysis, like financial modeling, economics within crypto, stuff like this, then just let me know. I'll be glad to make some more videos. But with that being said, guys, I'm going to sign off. Oh yeah. Also, I think I'll put a link for this spreadsheet. If you guys just wanted to check it out, I'll put a link for this spreadsheet down below so you can check it out if you want, as well as make sure you grab my altcoin spreadsheet down in the link below. It's a great research tool to help you guys find those altcoins. All right, guys, that's going to do it for me. The Fit Crypto is signing out. I'll see you guys in the next video. Keep making those crypto gains. Peace.